Yo, Mr. Anderson here, True Crypto 28. Just stopping in for a market update for everybody. Gonna really just continue off of what we discussed last time. See if there's any changes that need to be made in reference to that. We'll go a little bit deeper on this absurd range that we've been in and go a little bit deeper on that as well. I did mention that I'll speak about some things that are upcoming on Telegram, and I will also get into the trading service that's being offered as well. You know what? Let me just start with that because I mentioned I would speak about this on video. We won't take too much time at all. Just kind of briefly touch on it. One of the main reasons is so I've offered this particular service, which is edge-based trading. Number one question I receive via DM always is, can you trade for me? The answer is yes. We partner with exchanges to accomplish this safely. Active traders that are interested in no-cost access to the service, meaning you're not going to send us money or pay us anything specifically directly for that service, can contact me via DM, whether it's on Telegram, or you can go ahead and contact me on Twitter as well. Usually those DMs are open for such things. When we're not offering it, we're not checking those DMs. So I know you will have a backlog of DMs from months ago that we never really were able to check, unfortunately, which is kind of how it is. But I just get so many DMs at this point that it's really difficult to keep up with it if I'm not specifically getting into something like this. So anytime we are mentioning it, which we will the next few weeks, of course, I have someone checking those DMs, so don't worry. You can always question us. Now, what is my point of bringing this up here on the stream? Well, got a lot of messages of people saying, well, first of all, they think it's a scam, or what is the catch and things of that nature. No scam. I don't know what the scam would be when you don't pay us anything, but pretty simple. I don't know if some people understand that, others don't. Let me just bring some of this up a little bit bigger. Okay, so we run our trades, right? And we've been running it successfully for well over a year now on just Bitcoin and Ethereum. There was a time where we also would put all kinds of signals for 100 different assets on Telegram as well, utilizing an AI algo setup. I don't like it because I like it because it gives traders full control over when to turn it on, when not to. Do they go long? Do they go short, etc.? So all of those questions are still in place. But when you have confidence in a directional bias, which is something I believe in, then you'll know, hey, let me utilize this for longs. Let me utilize this for exits, whatever it might be. Well, it also is a mess if you don't, and it's certainly a mess when there's high time frame chop and things like that. And with alts, things are typically all going up or all going down. So I sort of wanted to back away from that aspect of it and just go with something that works, because the reality is the trading service, the edge-based trading service, is just designed to help people make money, right? So I'm a help you fish type of guy, so I'll continue to do that, where because I was a trader that struggled for many years. Some people don't realize that I was the worst for several years. And it took me a long time. I almost gave up. So by the time, but for all the effort it took for me to master it, I do like to help other people on that journey. All right, hit my cough button there. So the idea is this. I'll continue that for sure, but now that we've been running this successfully for so long, you have last month ROI right here. That was printed out about a week ago. Last 3 months, feel free to pause it if you want to take a look. You will have drawdowns. It's very normal, but you certainly see the consistency. Last 6 months, right? It's up over 100%. Last 9 months, over 120%, etc. This is a way for someone to be able to put their money to work if they choose to. Put some risk on, have it available 24/7 on an exchange, right? Meaning we're not the ones controlling your account or anything along those lines. We've actually partnered directly with an exchange. And the exchanges that we work with will allow you to replicate our trades in real time. We're the ones that are actually giving up the information. You don't give up any information or anything along those lines. The way it works specifically is we've given that API information to the exchange, and then the exchange will allow you to sign up and replicate the trade. And it doesn't matter account size. It doesn't have to be a minimum of 1,000. But my point is, whether you're at 1,000 or 10,000 or 20,000 or 50,000, the account side is irrelevant. It's going to be based on percentage. So it's going to do the same percentage type trade that I'm doing. So this will always be something that makes sense for you, whether you're at $1,000 account, 10,000 or 50. In other words, if you would have made 100% over that period of 9 months or 6 months, if you're at 4,000, it would have been 8. If you had 20,000, it would have been 40 now, etc. So the idea is it's based on that percentage, and it calculates the trade size based on that as well. And that's something to where, we designed this specifically to capitalize on market trends and impulsive moves. So that means that it's going to perform best when the market moves in a decisive manner. So kind of give you a basic understanding of that. If I was going to go back to a chart, when this happens, right, we expect to do quite well. When we get into some chop, now believe it or not, it's actually done very well during this time too. But when we get into some chop, we're more than happy to take some feelers and throw out some trades out there. And we're essentially looking for what's going to work, because I'm one that'll preach more than anything that there's going to be times where some styles work and there's going to be times when others don't. So we control it on our side, and we're more than willing to take a little bit of a drawdown during times of consolidation, feeling very comfortable that when we are trending, we're going to make up for it and then some. And again, in reality, can next month be different? Can next 3 months, next 9 months be different? It all can. But at the same time, the record speaks for itself in terms of what it's been doing, right? So last month, last 3 months, last 6 months, last 9 months. If you want information on it, DM me specifically. Again, it's a minimum of $1,000. You don't send it to us. You don't pay us. It's your money, your account. You keep control of your account, etc. We don't know any personal information on your account other than what you're trading with, so that we can give you a way to set it up specifically so that it works according to your account size. So complete control, safety, etc. It just allows you to participate 24/7 with some risk on. And the idea is consistent returns, and that's it. And then we'll utilize the Telegram for going over some of that, going over the history of it. So maybe weekly, certainly monthly at least, we'll talk about, hey, this is what the last month was like. Give some more information on that in terms of, hey, here's the kind of trades we were looking at. Here's why we might have had higher trading volume. Here's why we might have had lighter trading volume. So kind of give you an example of this, like the last few days when things were just up, down, up, down. Not exactly the environment for an account that's looking for consistent returns, but yet, we were able to hit the majority of these trades, right? At least these are the ones that are showing. I think we took a loss right after. I think we went win and then a loss after this, and then prior to this there was another win and then a loss before that. So there's going to be plenty of losses, of course, but I'm just showing you this, that it hasn't been super active because of the environment, because the high time frame chop isn't the environment that we're looking for specifically for that. Doesn't mean we won't trade, and doesn't mean we won't take opportunities to go ahead and make some money in that situation. But anyone that wants that, again, DM me directly. I'll jump off that particular subject and let you know, do not send money to me. Do not send money to anyone claiming to be me. We don't ask you for money. You're not paying us, etc. Again, it literally is the ability for your trades to mimic ours. You, by the way, can still do your own trades. Use your account to make more trades, trade as you wish, etc. We don't use enough leverage to where it's going to affect you in that way unless you were going crazy on leverage on your side. But it's pretty easy to calculate that. So you can ask questions about it. We'll go over it. I have people that answer that, etc. But my guess is, we ran this now for over a year. We had it rolling good on one exchange before, and they changed a lot of things. It became a real pain in the butt. So I started to invest some time and said, all right, well, let's go ahead and look into some other options and how to get this out to people. And now I have it to where I really have a broad spectrum of how I can bring it to people and make it easy, cookie cutter, etc. So again, DM me, we'll go over that. My guess is this is something that just consistently grows as far as users and as well as obviously the ROI, because performance speaks for itself as far as that's concerned. So that's how I would see it. But again, the risk is still yours. It's a trade no matter what. Nothing, there's no money trees, there's no anything. Of course, there's risk with anything that's involved, and ultimately I leave that to you to decide, hey, how much am I willing to risk, etc. But the good thing is you do keep full control at all times. You could turn it off. It's right now, you could turn it on, right? You could then turn it off. You don't like the environment, you don't like the news that came out, you don't like that it lost 2 trades in a row, turn it off. You have that flexibility. Then you also have the flexibility to amp it up as well, meaning if you have a $5,000 account, you can have it trade as if it were a $10,000 account. The risk there is obviously you're putting yourself at higher risk to also lose a higher percentage of money. But what I would say is wait until you get into profit. So let's say you had a $5,000 account. If we build that up to 7,000, one thing we do anyway is we get slightly more aggressive if we're hitting on a run like that anyway, because we're playing with house money. So we don't mind at that point. Say, all right, well, let's be a little more aggressive if we see a reason to be. And we're willing to take a shot at the bigger gains in those situations because we know we're playing with house money. The other side is that the user should also wait, in my opinion. Don't do that. Don't get 5,000. Don't use 5,000. Say I'm going to trade like a 10,000 from day one. Of course, look, I'm not your daddy. You can do what you want. Would it have done great the last 9 months like that? It would have. But my point is, I would wait until we're able to get that account higher for you. So if you get it to 5, then to 7, you say, well, let me nudge up the aggressiveness because I'm looking more for growth above anything else. I don't mind a little extra risk. Then that would make sense. And at the same time, you could DM us at that point as well. We can give you our opinion on it. We can go from there. All right, that's it. That went actually a lot longer. Let's kind of just jump back into the market update side. And again, with Telegram will be a place where I will still teach people how to fish, right? Meaning I'm going to very specifically go over my methodology, go over my techniques, etc. I'm going to also share True Vibration, which is a trading tool that I have that gives tremendous edge as well, and how I personally like to use it. But the trading in those certain scenarios is still going to be up to you. I'm not going to be a guy that's like, hey, I'm doing this and trade that. I think that's the silliest thing in the world because, one, I change my mind a lot. Moreover, every trade that I have is, hey, I'm entering here. I'm wrong there. It might be that if I'm wrong there, I'm flipping. I don't know how people that trade like I do possibly would post this stuff. Like, I mean, I don't get how I would say, well, you know what? Hold on. I just made a decision right this second actually to flip short. Wait, let me pause and tell the world, hey, world, you know how I just told you 37 minutes ago that I'm long? Actually, it was a swing failure on a different time frame, and I'm realizing now that the time frame that I prefer actually is showing me a rejection, so therefore I flip short. You know what I mean? It's just not something that is very efficient. That's the reason why we have the hey, we can trade for you option. That's what that is. As far as the teaching option, I think that's just going to be more of showing you like, hey, this is how I go about it. If I'm in a scenario, I'm just giving an example, but let's just say, can I find the chart? Yeah. If I'm in a scenario where I see like, hey, we're running into some topside resistance here, we're at a lower high, we're showing a little bit of exhaustion at some trend lines perhaps, getting a little overextended. Maybe I'll talk about this in a minute anyway. And then I go to a lower time frame, I'll then show you guys, well, look, I like to look for this kind of setup or that kind of setup. So this is the kind of thing I'm actually going to start putting a lot more onto Telegram for people that are interested in learning as well. So they'll have both options, risk on with some trading and the ability to learn for themselves and decide to take their own trades if that's the way they want to go. But please don't ask me for the True Vibration right now. I got people that are already answering and getting people set up on the copy trade trading service. So it's a little hard to do both. It really is kind of a pain in the ass to offer one service and the other. And again, when we do offer it, we don't charge. So there's not going to be a charge for the True Vibration. It's more of a community type thing. We want people that have like mind, that want to be involved and stick around and things of that nature. It's kind of the idea here. But again, with that, I'll also kind of get into the methodology, which for me is like, hey, I come up with an idea for a directional bias, but it's always going to be dependent on new data, which is like, okay, if I'm right, I should see progression to this side, right? I'm not a person that's like, oh yeah, I'm expecting it to top out here and then it's up here and I'm like still expecting it to top out. Like, well, I better have a different reason, right? The reason I had it here is I saw some exhaustion. I was at a lower high. I thought I was overextended to a trend line of some sort. If I'm now way higher, why would I hold on to that? Well, those are typically the people that are bullshitting, don't know what they're doing, getting millions of likes, and aren't actual traders, right? Because you should always set a I am wrong here type of stop. And then at that point, you have to say, well, I was wrong. Does that new data put me in a position where I actually have to flip the other way? And that's a key scenario that I think people really struggle with trading and not understand that. Now, by the way, I'm completely fine with people that only trade in one direction. I actually like that for beginners and novice, let's say, because it's hard to go long, short, long, short, long, short. But still, even in that situation, so I'm looking for shorts, and if it doesn't pan out, I'm out, right? I'm sitting out. It's the same type of scenario where you say, well, I'm not going to look for shorts no matter what. I'm going to look for shorts in this scenario only. So again, these are the type of things I would like to speak about. I know it's 1,000 people watch it, maybe 15 of them get it because it's hard, right? It's not easy. But even if it's just planting seeds that'll grow in a year, 2 years, or 3 years, I'm good with that because I want to provide information that will actually help a trader in the future, because I know about the struggles, and it is a struggle, and it's not ever going to be a binary scenario. That's the thing. Most people, they're looking for that binary answer of like, well, yeah, if I do A, B, C, and D, it's a winning trade. No, it's not. If you do A, B, C, and D, it gives you an edge. That's the idea. I mean, if you're doing it properly. So if I do A, B, C, and D, it gives me an edge. Maybe I have a 60%, 63%, 64% chance of success. But I have to have the discipline to know that you ready for this? I'm guessing. No one says that. Let's use the word predicting, right? Because it doesn't hurt people's egos as much as guessing, right? But we are guessing. You know why we're guessing? Would you, at this point, here we are, if I say, oh, long or short, you say, well, I like longs. How confident are you? Very confident. Oh, I know it's going higher. Okay, I'm glad. So will you put that pinky finger on the line? You know that cute little pinky finger you got there? So if you're wrong and in 4 days from now we're lower, can I chop it off? The answer is no, right? Which means you don't know. Nobody knows. They're just so unwilling to accept it. We get edge. So our superpower needs to be the fact that we accept the fact that we don't know. I know it burns your ego. Oh, well, that's no fun. I want to know. I want to be the guy that's able to step up and say, look at me. Look what I did. I'm so smart. I do that on Twitter all the time, playfully. Probably 90% of the people don't realize that it's playful. Everyone in my Discord knows I'm literally goofing off when I do that because I think it's funny. The reality is we're in a game of taking educated guesses. And your superpower, if it's what it should be, which is like, oh, if you said, no, here, we're going to make a higher high, right? We're going for it. Well, if I then come into a swing failure and immediately realize, go, wait a second, what I thought was a higher high is actually an exhausted look, right? A lower high in my with a derivative that I like. So these are derivatives of price, right? It's showing me some divergence and bear divergence. In this moment, I need to have the superpower to say, I'm wrong and definitely not long, okay? Now, it's now another step to have the capability to then say, I need to switch short on that. And if you did, great. But even just saying I'm wrong and no longer long saves you so much money, and that's the key. You got to survive above all else. You got to survive and not take on major damage to make real progression, so that when you do get on your run, right, you do well. Maybe this was a spot where you just couldn't miss. You hit 15 in a row. All right, well, if you survived all of this and didn't take on too much water, well, you could bet you could run it up pretty nicely during a trend that you catch. Sometimes we miss the trend. I miss trends all the time, right? Where especially when you're in a higher time frame chop. So maybe we're in a high time frame chop on the weekly scale, but I'm in a position to where I'm thinking, hey, you know what? If this is X and this is Y, maybe we're in phase B. I expect a bounce. And in that situation, no, I'm actually wrong. It's dipping another 20%. I'm just randomly going over things, but I'm just making a point that obviously I'm not going to kill it in those scenarios. But for me, because I'm a different type of trader, obviously it's price action first always. For me, it's kind of how I look at things. But I believe looking at derivatives of price can be, again, meaning just an oscillator of any kind that you like, a momentum oscillator, etc. Obviously, we're going to look at volume, things of that nature, which are going to be key. So there's a lot of different elements you can use, but you're utilizing some kind of derivative of price that it can help you once you definitely have a firm grasp of market structure and understanding price action and things of that nature, because it's those derivatives that'll let you know that, hey, at those points of inflection, where are things going, right? So we could see this reversed here, right? So we came up to, which I already had pegged out as a resistance line anyway. So that's key if you know your support and resistance. And they have, if you happen to draw them very well. But let's just take a look at this like purple line up here on this particular subject. Just consider what I'll really look at is the yellow for now. So I'll make it bigger if you'd like. Smooth. Let's go really, really big with it so it sticks out. Okay. And when it gets above the white line or below, I would look at that as a reset. But my resets, I look at from high to low and low to high. And if you don't know what that means, what it means is that if I go like this, above, 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 none of these are resets, right? Because I have to come back below for there to be another reset on the top side. So this is just all part of trend. No, I'm trending, I'm good, I'm good, I'm good, I'm good, right? This is the reset. 1, 2, 3, and it can be very helpful because it helps you to capture trends in that situation. So again, these are the type of things we'll go into Telegram in very in significant depth, where that might be 1 hour on this subject. But if you can master that, it can be very helpful. And the idea being that we went reset, right, into a potential reset, didn't make it down yet. So this is the reset here at that point. And then again, you end up coming down off of that level. And I can start to look at what in this environment. I can start to say, well, wait a second. On these lower time frames, I stopped gaining ground. First of all, we can see the stretch here, right? So higher high, and now suddenly this higher high is very weak. This one even weaker, right? And it's met with a divergence within the oscillator that I'm utilizing. And then this purple one, if you don't know about it as well, it's even more so. This is a faster line that we'll look at, that I like to look at. So it's these derivatives that tell me, well, wait a second, something's going on here. It doesn't mean it's going to completely reverse. It doesn't say, hey, this is exactly what's going to happen. But it does tell me specifically, like, well, this is certainly an area where we might see some significant ranging, right? Now, an ideal scenario would be like, all right, well, maybe to hold on in this environment, right, that you would have held this range. This would have been something you're looking for. I know we're tying a couple subjects in, but I think it's helpful for some people or for others to know, like, all right, well, this is something that I eventually want to put in my tool bag, this kind of thing. But we could say, like, all right, well, here we are, and we established this particular range. We went from low to high, held the low, barely made a higher high a couple different times on these lower time frames, but we fell back into range, right? Well, it wasn't until about, let's just say it's there if you want, but regardless, in this area, it wasn't until about here that you would have said, well, this broke down, this is the problem. But we noticed from the derivatives up here that there was an issue right at the top side. And if we can now put some of those pieces together, where I say, well, I'm showing some issues, but it's also happening at a horizontal resistance that I have drawn out, right? Along with a diagonal, which of course is far less, and I'll show you that diagonal in a minute. That could at least have me not looking for long, because what happens when you get to a support or a resistance, support resistance, same thing, depending it's either above or below. But the idea is, what happens is you want to see this gain, and if it comes back, that's fine, but hold some kind of swing failure. It could even dance around there, that's fine, and then go again, right? So you want to see it hold higher high above the resistance, say, oh, okay, maybe that's flipped it to be support in that environment. That's kind of the idea of what we would be looking for. Okay. Anyway, so what did this mean? Why bring it up in this context? Well, essentially, from where we were a week ago, and we'll kind of touch base on that, we were in a position to where we would have liked to see this hold, right? And I'll talk about that as well. And it just didn't come to play. But again, utilizing some advanced techniques, we could have put ourselves in a position to say, well, at least we're not looking for longs at this point. Let's just give it some time. We had no chance of losing during that burn. But again, the one that was already sniffing out the short or anything along those lines, you could have rode that down very easily. If we go into this, again, these derivatives, we're looking at what? A situation where we went bear divergence into orderly momentum, meaning I'm showing a orderly momentum to the downside, into a hidden bear. So it's a continuation divergence from that point to that point, giving me this into, yes, another orderly, continue to just drop lower all the way down. Very clean for the person that might have been looking for a short. I've already explained that if you weren't in the mindset of a short, at least you would have been out during that. And that in itself is a blessing. And you need to see things that way in trading and understand that, hey, if I didn't get raped during that, that is also a win. because there will be more opportunities, right? We spoke about that the other day. So just wanted to kind of touch base on that a little. Let's just kind of run through the. Oh, you know what? So this is going way back, as I'm going to show you on a high time frame. We started this back in December of 2022, so we're at 15,000 at the time, and from 66,000 to 15,000, we were very, very bearish. And at that point, Wyckoff, right? I bring it up because we're going to review what we talked about last week a little bit. And in that situation, it was Wyckoff accumulation pattern seemed to be in place, right? For me, at least, right? So that's kind of what we talked about, and we burst it essentially higher. That eventually got us into the $70,000 range, right? Why bring that up? Well, you'll understand in a minute. But then we talked about this, which is on the daily scale, going back to April, we were saying, well, this has, when I say we are like me and you on speaking on these videos, but this had the look to me of a reaccumulation, right? And I pointed out, I was very careful, and I'll read it again because I think it's so important. I think this is the part everyone misses, because I gave this disclaimer. Everyone loves to post schematics and get a lot of likes. Most of those people are committing a fatal mistake where they assume it's phase B. Some people I'm losing when I say that, but there's different phases of a range. We might break them down into 5 portions. But the idea here is that people make the mistake of trying to label the phase ahead of time. The reality is that is a hindsight thing. You know, we label phases after the consolidation is over. That's when you go back and do your labeling. So you can't make the mistake of having a bias, which is what this is. It's hard enough to predict the next move, let alone the next 3 moves. So this causes a bias, and having a bias often leads to significant losses. Our TA should be used to help find us edge in what will happen next, right? So the idea here is that, you know, I'll just finish it. It says we should also realize that many accumulations are failed distributions and many distributions are failed accumulations. I think that is such an important element. I really believe that a lot of people, they get into this scenario where they believe that it is written like that. What do I mean by that? I'm just going to go in here real quick. What I mean by that is I believe there's a lot of people that think back here, meaning it's modern day now, but they're thinking, you know what, back here, someone knew, the market makers, someone knew that we were going to go here and then there, and then we're going to go there and then to that, and then take it up to there and then here. No, guys. No. Someone might have had a plan. Someone with big money might have had a plan to drag this out and do things of that nature. And I get all that, and that makes a lot of sense. But as far as the very specifics within the timeline of how long it takes and how long it's going to take to either break the range or, you know, put yourself into a situation where we see drawdowns or springs or failed spring, that is all to be determined by so many different aspects, right? And we really have to focus on that. We have to keep it in mind. We have to put ourselves in a position to say, well, wait a second. If nothing's written, then I have to pay more attention to the data, which is always key. So I only bring that up because I really believe that so many people are really stuck on that. And that's why I mentioned this, that many distributions are really started as an accumulation. That's why they look the same. An accumulation or reaccumulation looks a lot like a distribution. Well, why? Well, because maybe they were trying, one side was trying to reaccumulate it, you know what I mean? And they were being set up and trapped by the bigger money in that situation who was ready to, had more conviction to sell it off. So they're all wars and battles, and that's why they have so many similarities. So the idea is if we develop a bias in that process, we're going to put ourselves in a real difficult situation. And that's kind of it. So why bring it up? Well, I bring it up because I also brought that up back then, explaining what was that. That was my caveat to let people know, like, hey, even though I feel really good about this, it may not be right. And that was the point that I made. And the reason I bring it up now is I'm actually glad that, because it can be a teaching moment, that it ended up being wrong. But you might say, well, what do you mean wrong? You said, Mr. A, to go long here, right? And we ended up going up there. The hell of a move, right? Yes, it is. And actually, that's another lesson in that, look, I don't have to be a prophet and know what the whole damn thing will be, which I wrote in there as well, because there's so many times within the pattern, whether it is accumulation or distribution, where these legs will line up anyway, where even if it is a distribution, I'm more likely to go up, right, and not only put a lower high deep up, but we're actually, even believe it or not, in these situations more likely when a distribution, which is why I'm not on team distribution, to actually see it break above and give yourself a situation to where you say, oh wow, look at this spring failure that you ended up getting, right? So you end up with this situation where you typically want to trap more people. We never got that, right? You don't have to get it, of course, right? But that would be the typical scenario that you would see in that situation, in my opinion, to make me worry more. If I saw that, I'd be, oh damn, so if this would have came up in this environment and did one of these, oof, I would have been like, oh man, maybe we are reversing something here. It's not good. I've never been on that team, but I have been able to say, no, along here, right? And that, hey, we're probably going to peel back. Now, do I know it's going to peel all the way down at that point? No, I don't know that, right? What I knew at that point was this, that even if it is an accumulation, I should expect some drawdown, and then we're going to find where the new support is. And you have the key levels to know, like, hey, this should hold, and this, excuse me, up here, this should hold in this range. If not, then we're probably going to visit bottom side again, right? So we're going to put ourselves in a position to where you can expect that support to be tested. Why? Well, because the big money, if this is an accumulation, they want to collect down here, right? They want to collect down here. In fact, look, if you're going to take it a little bit lower, they're willing as well. So these are the things we kind of bring up back then. I also brought up that, well, this would have been a spring, but when we saw this come back, I made the next video, right? Where is it at here? Let me see how I presented this. Okay, so I mentioned that we should see a shakeout. So this is the point. So why bring that up? So I show these because I don't like to show them and then act like you said something that you didn't say. I'm not perfect by any stretch of the imagination. But the reason why I expected this, so remember I called this, right? And then yet I was able to say, no, I expect a shakeout now to new lows. And you might say, well, you're flipping. No, when I called this, I very explicitly said this could either be a spring coming, or we're in a larger formation. If you watch that video, and I encourage you guys to do it, I think it would be good teaching now that it's hindsight to see like, oh, okay, wow. So it's interesting to see that someone was able to speculate this before. And that's all I'm trying to do. I want to give myself the options to understand, like, wait, if we get here and fail, what's it going to look like? And so I'm prepared. And that gives me better opportunity to be part of the downside. Or if this here fails and reclaims, what's that going to look like? And it gives me more of an opportunity to participate on the upside. And those are the type of things that you want to learn. But back then at the original video, I said, or we're on a bigger scale. And I've spoken about that for a long time. And we're going to have a much bigger range that's going to have to play out. And in doing so, I was able to speculate that we would fall back and have a shakeout, right? And then another spring attempt. You know, you spring, remember, a lot of things that people don't realize is that springs are some of the least successful trading strategies you can imagine, because they often fail. They fail far more often than anything else. So people are always trying to create springs. These have actually been fairly impressive. But look, make no mistake about it, overall, this has been a bearish formation. If you want to call it a bull flag, so be it, but a bull flag still means you're dropping, right? And if you're wondering, like, where do we get these lines? Why do I even have these up here? Obviously, we would look primarily at the range, and you can look at that a couple different ways if you want it. But we had a range, ultimately something like this. You see I have this because that's top side, right, where we had this consolidation. So we had top side, breakout, top. And what do we end up doing exactly? And I mentioned this on that same video. It wouldn't shock me to see a top side retest at all. We tapped it and bounced back. And, you know, you're hopeful that things going to start moving here from this point. But why bring up the range? I'm just showing you that horizontals always matter more than the diagonals. So anytime I show someone a diagonal, don't think I'm in love with a diagonal or not. The reason why I have it still up here is because when we made this video, just show everyone how this was made, right? It's the same one, same exact. You go back to the video several months ago, back in April, you're gonna see that it was right here, right, that we were able to make this, which is, all I did is this. Take array, I'm going to go beyond, and it's going from the high to that high that was put in place right there. Now, I don't know what's going to happen. I didn't know anything else, right? But I did that at that time, and then what I'm going to do is this. So I went from the high to that high. So remember, we don't, at that point, this is all the data we have. And I'm just trying to give myself an area to look at. Well, at the time, I would have I would like to see where the low is going to go to, but at the time we say, well, we started this ranging formation here. So how did I get this level? At that point is I clone the level and just literally come and match it right up with the low right there. And why it's interesting is that it's not going to give me anything that's concrete, but it's going to give me some intel in terms of now what's happening since we began to range, right? Well, what we're seeing is you'll like to see some elements where you will be a little bit exhausted or overextended, or the other side, exhausted and overextended to the downside. Well, started here, and look at this. Eventually, you make your way down. You could have drawn this a couple different ways. I get it. Like initially, you might have said, no, I want to go here with this. Right? I understand that. It works too, and you're going to kind of see what I mean. So let's just use both, because this one would have made a lot of sense, because we drew it right there, and I would have went to the low, right? For whatever reason on that video, I went to that one. There's a couple different reasons why I do it. I probably would have put both of it in my own research, but the idea is that it's going to give me something beyond the horizontal that gives me an idea to look for the potential of exhaustion during that element. Because what I want to see, whether it's a horizontal or something like these diagonals, I do want to see it reclaim, show it as a support of some sort, meaning that it's not willing to go below it, and then make a higher high above, and then I can then get rid of that line, right? In that situation, okay, this thing never meant anything, or it did, right? Well, now in this case, since we're not making it back to top side in this event, in this scenario, that's why I like to give it a little diagonal. And the idea is we get up there, and although it's trying, these are failure. These are weekly. If I change to a weekly, you'll see what I mean. They're going to be wicks, basically, right? So even though we drew it out that way, we're seeing that the weekly has not been willing to commit. And it looks a lot better on the weekly in that situation. And that is money coming in and selling those opportunities. But look also on the downside, no matter which one you looked at, if you look at these, you saw a bid come in, right? This one penetrates it, a strong bid comes in. It touched this lower one as well. Again, these things aren't perfect, so we can look at a few different areas to give us some ideas. But this could have put you in a position to say, well, let me go down to a lower time frame and consider some potential longs, right? And that could have paid off very well if that were the case. Now, again, for anyone that was looking for shorts only, great. I'm not saying you should have done one or the other. I'm just making some points in terms of how these things can work. But then you come back up, top side element of this, you even got through some potential resistance, etc. But look what happens. You get up there, and we start to now see it, and that's when I can focus in on a derivative of some sort that I like and say, hey, is there a reason that the tide might be shifting a little bit? And that's something that can get you into a trade pretty early and help you for that downside action, right? Get back down there again. Oh, okay, look what's going on. Not only were we testing this horizontal here, but also that diagonal that we had here in that channel, and same type of scenario. You could come in here and look at a derivative or even drop the time frame, and suddenly it's like, oh, well, look, happens to be some divergence there, but not just divergence, because divergence alone is nothing. If I have divergence along with some methodology and some support that's showing up there, and you give me a reason to long on top of that on a lower time frame that coordinates, now I have a lower time frame momentum play that aligns with an idea of a potential reversal in the higher time frame. So I'm able to stack some concepts, and that's what's going to create a little bit more of that edge to give me a different percentage outlook on it. Meaning, instead of 50-50 coin flip guessing, I might say, no, I feel 60-65% chance here or better. And more importantly, the risk to reward suddenly is terrific in that environment. And that's kind of the idea and the concept behind it. Here we go again, back up here, happens to exactly reject as well. Again, not a great sign, right? Because the other thing it shows you is like, look, the momentum really did try to make a push. Now, ultimately rejection, right? But if we're just looking at from this top to that top, what happened? She actually showed some pretty good strength and effort. That's why there was a second attempt there, failed, etc. Okay, let's see how far it goes. And there was significant selling that came in. There's no other way to look at it. Now, what was the selling? Different news events, things of that nature. We talked about all that. I was going to play part of the clip from the last video. I won't do it, but I mentioned that on the last video as well, that, hey, we have some things going on, election related. I actually said on the last video, before it was speculation about Biden dropping out, there was none of that. What if Biden drops out, right? What if that gives a spark to the Democratic Party, and now suddenly there's a lot of people that were feeling really good about crypto that don't feel as good. It gives you a little bit of a shock. So that's some of this that went on as well, in my opinion, along with some bad news, along with some things we know about the external sources selling, along with people jumping out of the market, etc. The point was that you did get into a situation where you had that political change as well. These are things you can't necessarily predict, even though we talked about it. All I was saying is like, hey, you can basically put yourself into a position where you see some of these miniature black swan type of events, and that's the nature of a big, crazy pullback, drawdown, consolidation, etc. But ultimately, that's why thinking a little smarter and being a little bit more open to the other side is a significant benefit here. And doing something along these lines as well puts you in a position where you don't have to guess. Now, of course, what am I looking at more than anything? I'm going to be looking at logical resistance and things of that nature. And of course, there are horizontal resistance in these areas each and every time. So you don't need these diagonals again. I can't stress that enough, but it does give us an idea of the channel that we've been seeing, etc. Now, with all that said, what did we recently see? Yet another swing failure type of scenario. We haven't made any clean breaks here, right? So you've been in these situations where you say, well, no, I made a lower low. Yeah, you did within a range. I like personally to see clean breaks. I want to see a break of structure where the low closes, right, below the previous low without any wick, right? So I don't want, what do I mean by that? Meaning there wasn't a wick prior that went lower. So you see how this wick went lower? Now, if this was the lower low and there was a wick, I don't care. That's a lower low. But because it held the level and then it happened to creep down below, yeah, that's fine. But now you've already extended the range for me and how I like to look at things to where it's just not as clean, right? That's all. And then the same thing happened here as well, because although you wicked below it, you held that particular level, just a big, sloppy, old, gigantic high time frame range. And this has been a very impressive bounce, right? So on the 4 hour, didn't mean to go in the 4 hour, but just kind of looking, normally I would tell my guys like, hey, this is the first step that you want to see taken out. If I change this really quickly, I'll do something like that and like that. So this would have been that first step on the 4 hour because this was the breaker structure lower. That was the opening candle of that. Can we take it? We kind of flirted with it. On the 1 hour, you see something a little bit similar, which was there, and then some rejection, etc. On the 15-minute, it was down here. We showed that the other day. Point being, that was really the start of things. So would it be nice to hold this on daily closes? Yes, that would be ideal if you were trying to build on something. Let me just kind of go through here. Did the Wyckoff. Got my computer dying on me with way too many windows open. So forgive me for the slow reaction time. Let's see. Okay. I wanted to show everyone this. We're in this range 147 days. You go, oh my God. So what do I mean you're in this range? What do you mean range? Well, I mean we extended. I mean we put a top in here and then we started a ranging candle, right? So the first sign of that ranging candle is right there. And we range. We're coming in, bouncing back in, still ranging, coming back. Look, we're still ranging. So what do we mean you're ranging? You're below that level. Yes, exactly. But this is all part of the same pullback. People do this all the time. The extension is here, right? So I'm on my higher low, higher high, ranging. I'm 147 days into this at this point. 147 days. And everyone must be thinking like, oh my God, this is a crazy thing. 147 day range. This is terrible. Well, it's also super normal, right? Seeing this March, right? While we likely will put in a local low soon, this 55K to 74K leg makes for a great place to take 3 to 6 months vacation while Bitcoin gets transferred from weak hands to strong hands and all to get brought back to reality. What has been working well won't work for a while, right? Why bring that up here? Literally right here. Well, we had that massive day. It looked like a ranging candle, right? So at the very beginning of this, I'm able to say that. Why was I able to say that? Well, geez, look at this run we just had. At some point, you need a break. But I also want to show you this. Now, this is summertime, right? I'm literally just coming back off of my summer trading type of schedule so that I'm going to be up and about and in more often. That's why I'm starting back up on the Telegram and doing the different things. But I wanted to show everyone a little bit of history about summertime in general, like just so everyone understands, because somehow or another we continue to get duped by something that has a 90% likelihood. What do I mean by that? 80, 90%, whatever it is. Well, let's look at the summer of 2012. Well, in the summer of 2012, you set this massive candle, and just don't get fooled by that because I set it here, right? Oh, first of all, you were already ranging, right? So that's the one thing I want to show you is you were already within range from the time you could say quote unquote summer started, right? So really, this is a unbelievable range that started way back, so more over a year. But during that entire time of the summer, you're ranging. So if I just start from this candle alone, 154 days. Actually, let's go here to the next one. Say, oh, I'm sorry, it's 180. Is that correct? Let me see if I don't want to mess this up. It doesn't have to be accurate, but at the same time, I'd rather it be. All right, so you don't take out that high. 161 days is what. So that's 161 days of summertime or around summertime ranging. What about the very next year? Well, the very next year set this ridiculous candle right there. This box just shows the range. I want you guys to see that I am drawing them out the right way. I'm just showing you better with the particular rectangle so everyone understands. 210 days that it hung out, and majority of the time, so let's just say 180 of those, 190 of them, just straight up chop, 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 chop. Summer of 2013. What about the summer of 2014? Set a low. That high doesn't take out this high. Peels back down. Finally breaks through. That's 175 days. What about 2015? Well, first of all, the entire thing, one of the most epic chops you've ever seen. 476 days, right, of straight up chop. But even within that time frame, you're talking about this is the summertime chop right here, which is, even if you just look at this condensed form, you're already 120 days. Now, the whole thing's chop. We already pointed that out, so it doesn't matter. But you actually go chop within chop, another chop up here, etc. So it's just extreme, but yet another year. Now, the 2016, same thing. You put in this upper leg. You begin to peel back. That low took many weeks. Then it came back, started climbing, chop around here for a long time, finally starts its climb, and 189 days. 189 days of high time frame chop. Now, the only year that really you don't really see a lot of this, you still get it, right? This is huge, massive leg. Now, part of that is that you just literally had the biggest chop you've ever seen, followed by another 190 days, leading into this extreme move. But on this one, you get ranging on the pullback. Then it takes a few more weeks and takes out the high, within like 49 to 56 days. So 2017 is the non-qualifier, right? So for me, it's like, well, it didn't happen in 2017. We didn't get the extended chop. But what about 2018? We're right back to it. We're right back to our winning ways and predicting chop. I remember this was one of the most boring ones I could imagine. And that was 147 days. And this last like 90 to 100 of them was murderous, torture. Regardless, next year, 19, 147 days. You put in the leg, right? Here's the leg right there. Come back, test it, hold it, back up again, finally drips below. Now, by the way, depending on how you draw things, you could have easily looked at this as another one of these, 200, 250, but let's just call it 147, be conservative. Then you go back into 2020. Well, even 2020, as you enter the summer, I'm just showing these summertime thing. Again, I could look at this whole thing as a range if I wanted to, but just this tight formation here still held 100 days in that tight of a formation before we went. Now, 2021, back to one of those years, right, where you would not expect much at all in terms of ranging, and you didn't get that much, right? So there wasn't much that came up here, but you do have, let's see, this particular level here, even within that, and this is all happening at highs, where you said, well, we're looking at somewhere in the neighborhood of 70 days. I will also call that one as like a non-qualified one, but the interesting thing about this, because we were so high and at such extremes, but still 70 days, significant amount of time to go sideways in its own right, but not in the same world where the majority of them been in these well over 100 plus, which again is like 80-90% of the summers that we saw. But I'm just pointing it out that you did have that, and then rolling out, and this was kind of pre-summer actually, and then you roll into this area where you basically go back to back, again, depending on how you want to draw a range. I could say this does qualify because on low to high, held that low, bounce around, put the whole damn thing. but that's also a range of 29 to 69, 64. What are we doing? You know what I mean? If I'm calling that a range, it is what it is. I'm not going to count it. But yes, you then went from that 49, 50, 60 day back into another 77 day after that big pullback, that $30,000 pullback. So you had a couple of them, and this one is pure summertime. So still, no matter what, every single summer you're getting a minimum of 2+ months minimum of some ranging, every single one. You go now into the following summer again, what do we see? 2022, another 147 5-month type of range there before dipping down to another range before jumping back up and finally exploding. And that led us into this massive thing. But right now, what was the point of all that? We're 147 days into this drawdown, and it couldn't be more normal. That's the point. So am I a psychic with epic powers to come up and say, hey, you know what? The next 3 to 6 months, where was that? The next 3 to 6 months, you saw it, doesn't matter. The point is that you're in a situation to where you can bet that we're probably going to see some ridiculous high time frame chop and see things come back to earth in terms of alts. Was really just what we always see. At some point, you need to, even if it's a reaccumulation, you need things to be transferred from strong hands to weak hands, and those strong hands can hold on. Excuse me, weak hands to strong hands, so that those strong hands can hold on through any selling to where the dips get smaller, and then the buyers take over and run you up again if that's the ultimate plan. So I do like to point that out so that people understand that's where it came from. That's the edge base. Was there anything else that was worth speaking about? The other day, August 5th, right? If you're selling now, you don't deserve to make it. Okay, why do we say that? What was the point? Well, I mean, it just comes back into this, basically. I mean, we're going right into topside support of the previous range. It's the ideal place to buy. That post was at before a $12,000 bounce. It wasn't any amazing rocket scientist type of scenario that I did it. So why did I post it? I posted it the moment we hit this right there. It was this moment, right? Which is the idea. So if I'm now coming back into here, you imagine now selling this. And by the way, so many did it. If we go to a daily and you see it there, it's scary. Look at the volume on that particular day. Now let's go into like a 15-minute. So this is the moment, right, that I posted this right there. You see this? And we went up and then came back and with a little bit of a retest. But the idea is why? Because we hit that level, right? And that's it. That's top side on the high time frame on the weekly that we've been speaking about for 5 months. That could be a potential low end target gets tapped and you're selling. Man, you got to reevaluate things. That's the idea here. Now, here we are within the range. I'm going to wrap this video up. Basically coming up to a point to make sure people are on the same page with me, which is what now? Well, right now, you're back into that resistance element, right? So nothing so super clear here. What I would do is I would say, well, let's look at, we're going to try to find an area. Well, what do you find an area? What do you mean? Well, I can draw out some specifics, but we're in a hell of a chop, right? The chop has been furious. So because of that, I like to come in and say, well, let me find some areas specifically. Let me see if I can find on a weekly, especially since this is getting so long in the tooth. I'm going to go in and look at my wicks here, and I want to touch as many wicks as I can. And I got 1, 2, 3, 4, 5, 6, 7, 8 wicks that acted as support here. And I'll zoom in here, and I'm just looking at, I'm trying to identify visually a zone, because right, price matters more than anything. So I now have all of these areas where once touched, it was a support. Now, supports don't always stay supports, and they don't always hold as much water as you need. But the idea is this, is that if I'm going to gauge where I'm at, I've noticed that when I've been above this level, this has wanted to reject price and send me north, right? Send me higher. And when we've been lower, it has made an attempt to reject. Now, we were able to break back above, right? So again, we're not talking about, pardon the Red Sea here, where it's something that's so crystal clear, but it does give me an area and think like, okay, well, that's interesting, right? If you could find a way to poke yourself above it, it's nicer, right? It's nicer up there. But it hasn't been a death sentence at any time, because we did reject just the one time. The problem is we don't have the rejections yet, right? to be able to hold this, to find an area that you say, well, there's a real problem, because the only area that's clear like that has rejections, you had some up here, so we haven't gotten back there. And when we do, we can take a closer look and say, okay, well, let's see what that zone's looking like. But ultimately, this is kind of where we're at, in that, yes, we only seen it break through twice. The one time it showed a little bit of resistance. It could have lost its luster here anyway. But my point is, I'd be concerned again for shorts if I reject here and then I start to show some reasons, technically, right, meaning sound technical trading for shorts, then yeah, I am open to it if that is to occur. Otherwise, I'm going into a lower time frame, and I'm gonna respect the fact that, hey, this was a pretty nice jump here. And I think I showed this a little earlier, but I'll do it really briefly. On the 4 hour, because I would look at this as a starting level, nothing more than a starting level on the 4 hour, but it was an area to where, hey, we broke structure here. Now, of course, the very first one would have been literally right there because it went lower. So break above, nice. You want to see it come pop back. It did look cleaner on these lower time frames. The 15-minute looks super clean. If I go show you a 15-minute, I will, since I did this on Discord the other day. Basically, what you would be looking at is that same scenario, right? So it's the same before the break of structure. So I'm going to go right there with this. And then it's just a starting point, no more than a starting point. And I want to see it like, oh, okay, well, I want to see it take that level, hold that level. Okay, take the level, hold the level. And then I'll look again for it to try to get back to that upper side to start testing some of that supply up there. And then on the 4 hour, the one we're dealing with now, you know, you didn't quite have it exactly where that was. It was close, right? It was in that range right there. So that was your starting level. This was range, range, range. So pop back above. Okay, I'm trying. I like to live above it. I would have had low time frame reasons to continue to look for longs, just like I showed you on the 15-minute chart. Now the 4 hour one is here. Okay, well on the 4 hour, a little cleaner at this point, says, hey, I'm working on something. Well, what does that mean? Not a whole lot just yet, right? Because we're in some chop. But ultimately, I would like to see some derivatives, right? Some of these derivatives of price show me that, hey, there is either some bullish divergence in my favor. There's some supports that are holding. You know, you have to get into a position here to where you understand, like, it's been choppy. So I am willing for shorts and longs, of course, but it's more complicated when you're mid-range, right? So if I'm lower parts of the range, of course, more longs. Upper part of the range, of course, more shorts. These are all obvious scenarios. But when you're mid-range, you could sit out if you don't have the trading chops to do it. But it's just more of looking at some effort versus result. So if I show like, hey, I made a tremendous effort to get there, I bled for a while, but I really held price well, and I start seeing the support hold, then yes, I can go into a lower time frame and say, yes, that might be a reason to show some continuation. So those are the things I'm looking for. I'm just looking for reasons to head a trade into a certain direction. I'm setting a stop that tells me, hey, I'm wrong here, right? So if I lose a particular support or anything along those lines, that's what's going to help me with that. I would like to see this continue to spring if it can. But let's see where it goes. I mean, I have to see the weekly close. I have to see exactly how high I can how high I can go. And then if there's continuation, the biggest thing is with all these things, once you see a nice candle or some of that kind of something of that like, you want to see some continuation, right? So even like this, a lot of people after the last stream, they were very concerned that the weekly lost this level. I'm not sure why. It was on that stream that we said, like, no, you know, we could easily see this level get hit, and we have to see this as one extension, one pullback, right? So it wasn't so vital that this level on the weekly took out that level, right? And then more importantly, if it was important, then you should see continuation lower. That's the thing that people lose a concept to understand. Like, look, if you've taken a level, so like for instance, we took this level, yes, we had a pause week here, but you see the continuation because it was important for it to take that level. It was a big rejection. Once it took it, it was reaccumulation on some low time frames and go again. So that's it. This is reaccumulation on a high time frame, and you know, the longer you can accumulate, the higher you're going to go, more than likely, right? So meaning if this is accumulation and we end up popping up, the party's up here anyway, right? So it's just more about like, let's not lose our shorts before then. Let's try to take advantage in times we can. Now the good news is like, hey, if we go back top side, like something along those lines, and we happen to be in a scenario where we're looking for longs, then things are going to work out well. But the style that I like to use and the things we're going to talk about on Telegram is one that puts me in a position to where I don't have to be exactly right on these things all the time. And I'm going to explain that very quickly, and then this video is going to be done for. Because of the way that I like to trade and the things that I'll teach, what I'll end up doing is, you're not going to see me take too many trades where I am just getting smoked. And the reason for that is that whether I'm looking for, now of course in these scenarios, this, I would only, you can see all this red, it's pretty obvious I would be looking for shorts in these scenarios, but I want to play devil's advocate and say that I was looking for longs. If I were, right, you would only see me doing that on some of these yellow resets, right? Doesn't mean that all of them work, but what you will notice is that in these situations, you're going to be in a position to where you get some kind of pop, right? And normally you're escaping with little damage. Now, I might get stopped, but you still see 6, 7, 8, 9, 10, it's 14, 15, 16 candles before it fades, right? That's a whole another set of data at that point. Same thing with this low. This is actually a winning trade if I was looking for longs. I'm already letting you know that my style would have told me not to look for longs in any of these. But even in that situation, because of that, and again, this is the stuff we'll talk about on the Telegram channel, I'm going to put myself in a position to where, now keep in mind, like this one, I'll give you a little caveat of how this would work. Because it hung out there, right, and never popped back above, I would have never been looking for a long in that scenario until maybe about there, and then I still would have needed some sort of local low. But again, it's already, you see red, I would not have been looking in that situation for any kind of long. But my point is that even if I were, I'm not as likely to get killed with that kind of trading style. However, on the flip side, because I've already mentioned this on other videos, clearly the shorts would be in play here, 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 and here, right? Even the last one that doesn't work out, what that equates to is literally nailing a short, literally nailing a short, literally, I mean, sniping the thing perfectly, sniping it again. Now, do I make other trades here? Maybe with another technique, but this one where we're talking about the most sound one, another gigantic leg down, etc., another small leg down. Some of these bounce back and you only break even, so I'm not trying to act like it's perfect. I'm just giving you an understanding that that's how you create some more edge. Even this one, which is probably a break even, tries to head south first, etc. And then when you see something like this, suddenly there's a change. Because why is there a change? Because you see this price action here, right? Well, now that I'm up here, well, something has changed. I went from what I call orderly momentum, right, where I have an orderly structure where while this is heading that way, price is heading down. Well, the first time price, which is always first, anyone's listened to me for 7 years, it is always first. Market structure first, always. I've said nothing else. It was the first thing I ever said to anyone when I opened the channel to begin. I said, listen to these words, market structure first, always, right? That's it. Well, if that's the case, well, the market structure showed me something, right? There's an element there, a change of character of sorts. And then it's in that point that I might consider either going to a ranging mode, which means I'll look for longs and shorts if I'm confident enough in my trading, or willing to flip and understand like, well, I'm certainly ready to look for longs once I seen that change in action here. So suddenly you can see how that can come into play in these scenarios. Same thing here, that believe it or not, you might see this and go, wait a second, you went long here, it actually reversed. Yes, but that's great intel, because that's a failure, and that failure again is what tells me flip, right? And that's what gives you the big leg down, because the best sell signal is a failed buy signal. The best buy signal is a failed sell signal. What's the point of that? Is that when you do things where you have a methodology that you know is effective and you're confident in your system, well, then that system is also, when things don't go your way, often going to put you into position to understand that it's not that I was wrong, right? It's that the data showed me one thing in the flip, therefore that was likely a trap that was set, and therefore I need to join the trap setters. Now, again, I already pointed out there's also ways to do that previously. If you're looking at different elements using derivatives and you get good at it, sometimes you'll hit it, sometimes you won't. Sometimes it'll save you from being involved, which is a win as well. But these are the type of things we're talking about. Anyway, I'm out for now. I'm going to focus primarily on giving you some more information as it relates to where we're at in this range. Obviously, There's a long way to go. We'll focus on the close. We'll probably do another 1 or 2 of these next week. Again, if someone needed to speak to me in reference to any of the other tools, True Vibration, again, please wait a couple weeks if you can. We'll do it all at the same time for that. And then, of course, the trading service and copy trade service, etc. DM me for details. Pay absolutely nobody for it. You remain in control. You'll have options ultimately of how you control it, etc. Over and out. Hopefully everyone's good. Enjoy your weekend.